Hello and good evening, everyone. Today is the 26th of April 2020, 6:40 p.m. It's a Sunday evening, and I thought of creating this video and keeping it as the best intraday time frames to trade as the topic. Well, I dedicate this video to one of my YouTube followers, goes by the name of NRSK Trading. And in one of my recent videos, he did check the video and he shared a question that why do I use the 75-minute chart where all use the generic 30 and the 60-minute chart? It's a very valid, good question. And so I thought I'll share my thoughts, experience, and learnings. And based on that, I think these are the best intraday timeframes to trade, especially for the Indian equity markets. So, why the 75 minutes? Why not the generic 30 minute, 60 minute, or something else? Allow me to take you back with me to my early days of learning technical analysis, working as an analyst and then a fund manager. And in my early days, everyone tends to have some beliefs. Sorry, and so was I. And I used to think that there must be some secret time frame, some esoteric secret time frame which will give me the edge, and I would be able to generate good, consistent returns. And so the search was on. I had tried with multiple time frames. Of course, for short-term intraday, it was the 15 minute, it was the 5 minutes. I also traded to some extent the 19 minutes time frame. I had some logic behind that. And of course, the universally used 60 minutes or the hourly charts. But then I did not see or find any edge. Soon I realized that there is no secret. If you can trade and if you have that clarity and conviction, you will be able to trade any time frames. And if you don't have that conviction and clarity and that understanding, then you will not be able to trade any time frames, and you will always be on the hunt or search for that secret time frame. So it does not exist. Now, if it does not exist, then how the hell did I come to the 75-minute time frame? Now, this I stumbled upon myself, and I asked that when we open a chart, which is the by default time frame that we all look at? And of course, it's daily. And if we want to go one time frame higher to daily, which is that by default time frame that all of us check? It's the weekly. And above that, of course, in that case, it is the monthly. So this is essentially, I would say, progression on the upside. Okay, if I'm stretching myself on a higher time frames, from daily to higher time frames. Now, from daily to weekly, how many days makes up a week on a trading perspective, Monday to Friday? So weekly is nothing but 5 days. And what about monthly? Month is about 4 weeks, like month to weekly would be 4 weeks and a little more than that. So let's say 4.1, 4.2 weeks. So now if we pay some attention, we are looking at a multiplier of 5 as we go from daily to weekly, and we are looking at a multiplier of 4, 4.2 as we go from weekly to monthly. All right. Now the million-dollar question comes is, if we go now to lower time frames, intraday time frames, what should we use? Now, intraday time frames, unit is not days, the unit is in minutes or hours. So I thought, how many hours or how many minutes of trades happen in a day in the Indian equity market. This entire logic I am calculating as per the Indian equity markets, and then we can use it for other markets also. So how many minutes of trade happens in the Indian equity market? Well, it opens at 9:15 and it closes at 3:30. So it has 375 minutes of trade. Now, I love the fact that 375 minutes ends with 5, because I can quickly corroborate with this 5. So if from daily to weekly I go 5 steps higher, multiply by 5 steps, why can't I divide it by 5 steps and come down to the next lower time frame? So 375 divided by 5 gave me 75 minutes. Well, there is more merit to it than what meets your eye right now. And if I want to go lower than 75 minutes divided by 5 will give you 15 minutes. And so further, you can divide 15 by 5 and you can get 3 minutes. So I can clearly see that I started off with, let's say I'll change the color and let's say orange. So I started off with the daily time frame. As I was going time frames higher, I saw weekly and monthly, a multiplier of 4 to 5. A daily breaks down to 375 minutes of trade. So you come down, divided by 5 and you find 75 minutes and then 15 minutes. So these are the time frames which I personally have been using for a very long time and I stick to it. The moment I believe that there is no secret and I stick to something, it has started working for me. So 15 minutes, 75 minutes, 375 minutes, which is the daily, and 5 days, which is the weekly, and then the monthly. These are the 5 different time frames which I keep a look at. Now, as I said, there is more to the 75 minutes than what meets the eye. Over here, I've opened TradingView and I've opened the chart of Reliance. And this is the daily chart. No issues with daily, weekly and monthly. Now, if you go to lower time frames, let's say the conventional hourly chart. Let's try and understand. This is the starting point of 24th of April, which was Friday. You can see the crosshair on TradingView on the right hand side in the black box. It's giving me the price. Focus on the black box at the bottom, which is giving me date and time. 9:15 is the time. It's a starting point of that candlestick, 24th of April. Next, after 1 hour, the starting point of the candlestick was 10:15. Then the starting point was 11:15, 12:15, 1:15, 2:15 and 3:15. So this last green candle started at 3:15 and finished at 3:30. So did this last candle have 60 minutes of trading within itself? No, only 15 minutes of trade. Compare this with the earlier 6 candles. Each and every one of them had exact 60 minutes of price information, except the last one. Only 15 minutes. But when you analyze the chart, when you draw trend lines, retracements, targets and whatnot, your RSI and moving averages, it will not understand that, and it will consider the last candle as exactly as its previous ones. But if you use your logic and common sense, is this candle as meaningful as the previous ones? Of course, no. So if you use a 60-minute time frame, either your first bar or your last bar, depending on which software you're using, will be different from the rest of the candles. It's true for any software you use because it will not fit in that 375 minutes of trade. Now, if I go to 75 minutes of trade, it starts at 9:15, 10:15 and 15 minutes more gives you 10:30, 10:30, 11:30, 11:45, 11:45, 12:45, 1 o'clock, 1 o'clock, 2 o'clock, 2:15. So this bar started at 2:15, 75 minutes, 215 to 315, and 15 minutes, 330. So this exact 75 minutes within each one of these 5 intraday bars. So when I use the 75-minute bars, I know that each and every bar, the duration of each and every these candlesticks is of 75 minutes and not less and not more. If you use 15 minutes, of course it will fit in fine. Each and every one will be 15 minutes. There is no doubt about it. In fact, if you use 5 minutes, that will also be true. So I don't use the 3 minutes. I generally look at, if I have to go below 15 minutes, I generally will look at 5 and not 3 minutes. And this is the reason why I use 75 minutes, 15 minutes, and 5 minutes. The logic of 5 minutes is that it is again divisible, 375 is divisible by 5. So if you ask me, if I put it down now, starting off with daily, weekly, monthly, higher time frames, lower time frames, 75 minutes, further down, 15 minutes. Ideally, as per the calculation, should have been 3 minutes, but it will not fit in. We will still have the same problem. So 5 minutes. For intraday trades, I always suggest stick to 15 minutes, not less. For 1 or 2 day kind of trades, holding for 1 day to max 2 days, the 75-minute time frame works the best. For positional, of course, the daily time frame, and further ahead, weekly and monthly. So how do you now use this for other markets? Difficult to do this for forex markets, or let's say the commodity markets. It starts at 9 and closes at around 11:30, etc. So the logic is the same thing. You start off with daily, and higher time frames you don't have any problem with, weekly, monthly. But then the moment you want to decide on the lower time frames, you break it down to minutes. It can be 375, it can be more, it can be less. And then you figure out what should be the parameter, the multiplier. Because on the higher side it is 4 to 5, it's always meaningful that you maintain the same multiplier of 4 to 5 on the downside also. And after doing that, in our market, in this Indian equity markets, we are lucky that we got 375, and the upward progression is also 5. So it fits really well. If day after tomorrow the exchanges come with a new rule and the market hours are extended, and I still don't have something with 5, then I might have to adjust a little bit here and there. And in this case, I will have to compromise. I completely agree. But the important thing over here is the logic. I could have done better than that. Yeah. The logic. The logic is essentially I am using the same multiplier at the rate at which I'm going up higher time frames is the same rate at which I'm coming down for lower time frames. So rather than using the generic what Tom, Dick and Harry in the market uses, it's always good that you use something which is more sensible. It has worked for me from the very day I shifted my mindset from looking out to deciding. It has worked for me, and I'm sure, 100% confident that it will work for you too. I hope in our SK Trading, you would appreciate this video, and this is my answer to your question. Please feel free to give me a feedback and suggest what more could have done better with this understanding. Till then, tomorrow is a Monday and we start another fresh week of trade. I hope and wish you have a good week of trading going forward. Till then, trade well and take good care of yourself.